Hi, Joe Goldie, Certified Financial Planner with Highland Financial Advisors. Welcome back to our YouTube channel. Today I want to talk to you about the importance of understanding what a FICO score is and how important it is to maintain a high FICO score if you can. So FICO stands for Fair, Isaac and Company. It was started by two gentlemen back in the 50s. Isaac and Fair were actually their last two names. And they were trying to come up with a metric that allows lenders to easily understand the amount of risk that they're taking when lending money, whether it's an auto loan, mortgage, personal loan, doesn't matter. They wanted a metric, they wanted to create a metric that made it easy for lenders to see what the risk was when lending money to people. And they came up with the FICO score. So the FICO score is important, but you have to understand too, it's always reported to the three credit bureaus in the US. So in the US, we have Equifax, Experian, and TransUnion. Those are the three big credit bureaus. It's their responsibility to really maintain not only your payment history and your credit history for all of the lenders throughout your life, but also your personal information as well. So always a good idea to keep on top of what those credit reports look like from the three bureaus. And in a little bit, I'll explain how to do that. So also important to understand is that your credit report is always in just your name. So even if you are married, your credit report and all of your payment history is reported just in your name. So it's never reported as a married couple. As a matter of fact, on the credit report itself, when you look at it, marital status is not even mentioned. So it's always just in your name. So the big things that to really kind of be on the lookout for with maintaining your FICO score and why it's so important is your FICO score ranges from about 300 on the low end all the way up to 850 on the high end. Just small differences in your FICO score could mean big differences in the amount of rate, the interest rate that you're paying on a particular loan. So I want to give you a couple examples on why it's so important to maintain a high FICO score, especially for divorcees. So in the first example, let's say you have a $400,000 mortgage and at a 6% rate, that comes out to about a $2,400 a month payment. If your FICO score is a little lower and the lender gives you a 7% mortgage rate versus a 6%, that comes out to about $260, $270 more per month on your mortgage. If you multiply that by your typical 30-year mortgage, that works out to about $95,000, close to $100,000 more in interest that you're paying over the life of that mortgage. Same thing, it works the exact same way with an auto loan. If you're borrowing $25,000 on an auto loan and you get a 5% auto loan rate, your payment's about $470 a month. If you have a 9%, it doesn't take much to have your auto loan rate go higher. So if you had a 9% rate versus a 5% auto loan rate, you're paying about $50 more per month. Comes out to about $3,000, $3,100 more in interest that you're actually paying over the life of that 5-year auto loan. So you can see just little differences actually in your FICO score can mean a big difference in the rate that you're paying, and that can mean a lot of dollars more that you're paying in interest over the life of these loans. So what are the big things to really kind of look out for with your FICO score and what goes into the FICO score? So one of the biggest things is really credit age. So when you're taking out credit cards, especially, you start out, you're 18, 19, maybe you take out your first credit card, that history really factors into your FICO score. Credit age is one of the bigger factors in calculating your FICO score. So the longer you keep those accounts open and maintain them, the higher the FICO score you'll have. The second is credit utilization. So that really is referring to what is your overall credit limit. So we'll use credit cards, for example. Let's say you have a $40,000 credit limit. Maybe you're only borrowing $10,000 of that $40,000 limit. That credit utilization will increase your FICO score because you're not using as much as someone who may have a $40,000 credit limit, but maybe they're borrowing $35,000. The credit bureaus and the calculation of the FICO score look at that negatively because you're using a lot more of the available credit to you. So that's called credit utilization. So the third is credit mix. And what this is referring to is the diversity of your different loans. So some people only have credit cards. That's perfectly fine. But ironically, the person who has a personal loan, a credit card, and maybe a mortgage, the FICO score looks at that and they see different types of loans with different lenders, and that credit mix, believe it or not, actually will increase your FICO score as opposed to somebody who has just a credit card. So credit mix is another factor. The biggest factor going into your FICO score is, and it's 35% of your overall FICO score, so it's really by far the biggest factor, is on-time payments. So whenever you miss a payment or if you're late, that will have the biggest negative impact on your FICO score, more than the mix, the utilization, the age. All of those things are important, but more than anything else, just make sure to make payments on time and make sure you never miss a payment. So that's really important. So what can we do to kind of counteract some of these things and keep a high FICO score? The very first thing, I talked about the 3 credit bureaus. They all have to report. Fortunately, thanks to recent legislation, we now have access to our credit report for free. Believe it or not, we have access now weekly. It used to be once a year you were able to get a free copy of your credit report. They now allow that weekly. So whenever you want to, you can pull up a free copy of your credit report from each of the 3 credit bureaus. To do that, you go to annualcreditreport.com. There's some other websites out there I would recommend you avoid using. The official US website for this is annualcreditreport.com, and you can pull up your free credit report. Just monitoring that information and making sure, closed accounts are closed properly, your current address is correct. A lot of credit reports do have some typos and some old, outdated information. It's not reported properly, so it's important to monitor that at least annually. I would say at least once a year, especially since it's free. Just take a look at your credit report. Another way to kind of help build your credit report that a lot of people, or your FICO score, I should say, that a lot of people aren't aware of, is getting your rent reported. So if you're a rent payer, if you don't pay mortgage, but you pay rent, those rent payments, you're not getting credit for those as a payment to help improve your FICO score. You're not getting credit for those on-time rent payments every month in that history. There are free rent reporting companies that you can sign up for. Some you pay for, some are free, that will report your rent to the 3 credit bureaus. That will absolutely help your FICO score. So that's really important. Some other things, some other tips would be to put a freeze on your credit report. This is, especially with so much fraud going on nowadays, by putting a freeze on your credit report, only you can unfreeze your credit to whenever you take out a loan. So no one can actually take out a credit card or any kind of loan in your name if that freeze is on there. And then when you need to use it, you can unfreeze it for that period of time and then put the freeze back on. So that's really helpful. Some other things, just regularly changing your passwords and your usernames are always a good idea, of course, and making sure you don't have any outstanding accounts that are open that need to be closed. Just close those out and then check your credit report and make sure that any of those credit cards have been closed or any personal loans. To recap, very, very important to maintain a high FICO score. We talked about the mortgage example where just a small difference in FICO score could mean a big difference in the rate that you're paying, and over the life of any loan, it means a lot more in interest money that you're paying actually over the life of the loan. So what are the things that we can do to be careful of? Again, we talked about credit age, credit utilization, credit mix, not missing any payments, all of those things. If you look up FICO and go to their website, you'll see all of those factors make up your FICO score. Missed payments or late payments, by far, 35% of your FICO score, by far the most important. What are some things we can do to maintain a high FICO score? Make sure that you are paying on time and you're never late and you don't miss any payments. That's the biggest thing. The second is, if you are a rent payer, then make sure that you're getting your rent. You can sign up for one of the rent reporting companies. Make sure you're getting credit for those rent payments. That builds your FICO score. Putting a freeze on your credit report is always a good idea. That way and you're alerted if anyone ever tries to take out an account in your name. You'll get alerted for that. And really just maintaining and monitoring your credit report on at least an annual basis at annualcreditreport.com. That's the website. I'll put that in the link down below. And that's totally free, and you can monitor your credit report from any of the 3 bureaus anytime you want. So I hope this was helpful. We'll see you next time.